Let's talk about the top 5 cryptos you should consider for your portfolio in 2021. I have been going heavy into cryptos recently, and I'm really excited about this space, and I've compiled a list that is as user-friendly as possible. I think I've really broken this down into the most understandable terms. That way, beginners, if you're new to crypto, this should be a good guide as to where you should start your research journey, as to which cryptos you should explore into a little bit more. Now, this isn't financial advice, this is just a general overview. I'm going to give the pros and the cons and the general information you need on 5 coins that I am personally very excited about. So if you're an expert in this space, you might want to just skip around a little bit to sections that are most relevant to you. Also, a side note, this list only contains 5 cryptos, so naturally there's going to be many other crypto opportunities that I won't touch on, so feel free to share your favorite crypto for 2021 or the future in the comments below, and we can have a little conversation about this. Also, beware of scammers. Every time I post a video on anything having to do with crypto, there are tons of scammers in the comments. Just ignore them or report them. Better yet, help me battle these scammers. I said in my last video, I'm about ready to start fighting these scammers, so just report the scammers or ignore them. I'm not going to ask you to text me or anything like that. They pose as me. It's getting ridiculous. But let's just go ahead and jump into the list here. We're starting off with the brand name, and then we're going to go into some lesser known coins. And the brand name, of course, is Bitcoin. Bitcoin doesn't need much of an explanation, so I'm not going to spend a whole bunch of time here. But simply put, Bitcoin can be thought of as digital gold. It's most well known. It is the most well-known crypto. Every other crypto is considered an altcoin, even Ethereum, and it will very likely keep its #1 spot due to its name recognition and its popularity. Now, Bitcoin is a proof of work coin, so you can't make money staking it like some of the other coins that we're going to discuss within this video, but you can earn some interest by lending it out through various services like BlockFi, which I have linked down in the description if you're interested at all in lending out your crypto. I personally believe if you're looking to get into crypto, it's still good to have a position rooted in Bitcoin. Now, we don't know what the price is going to do in the next 6 months or the next year, but the general consensus is this thing is here for the long haul, and the price will go up dramatically over the next 5 to 10 years. Now, the best buying strategy to hedge against the potential big drops or big swings in the short-term volatility is to buy a set amount every week or every month to dollar cost average. That could be $1,000 per month or $100 per week, whatever your budget is. That way you can hedge against the volatility. Now, there are some cons with Bitcoin, and they're really the same cons as any other crypto. It's volatile, and there's very little regulation, and there's certain other just concerns with cryptos in general, not necessarily specific to Bitcoin. The next coin that I want to talk about is Cardano ADA. This is an alternative to Ethereum. So we're going to go a little bit lesser known, and then we're going to go back to a little bit more known after this. The focus for Cardano is on high security, on scalability, and on low transaction costs. This one has been a big winner in the last several months. Cardano is unique in that they take a very scientific approach on everything they do, which is something that I appreciate. I appreciate being able to look at the research and seeing how clear everything is here. They are very open. There's very little that they do that are like hidden in the shadows like certain other smaller cryptos. And also, all changes and new features are developed, then reviewed and agreed by academics before implementation. So like I said, it's very scientific in their approach. In the future, Cardano will allow for smart contracts, which will be huge. It's not happening quite yet. Now, smart contracts, if you're not aware of what exactly they are, they're going to be huge in the future. They allow for agreements to be executed between 2 parties without the need for middlemen, and the potential manipulation that comes along with middlemen and the cost that comes along with middlemen. Imagine just being able to work directly with whoever you are buying or selling something or doing some kind of transaction without any BS middlemen. That's what a smart contract does, and that's something that Cardano, as well as other cryptos, focus on. Now, they use a proof of stake system. This is an alternative to proof of work like Bitcoin. So instead of mining the cryptocurrency, you can stake it. This basically turns your crypto into an income-producing asset. Because your asset is going to work for you to help maintain the system, you earn money off of holding that crypto. And this is going to revolutionize crypto as a whole because it completely changes the asset. You're no longer just holding on to something hoping that it goes up in price. You can buy something knowing that you're going to receive a return from it. It's like the difference between investing in a meme stock that you're just hoping goes up in price but they don't have any profits or dividends, or investing in a stable long-term dividend producing company. So this will literally revolutionize holding cryptos. Cardano can be purchased on most large exchanges like Gemini, Coinbase, whatever you want to use, you can probably purchase Cardano there. Now, there are some cons with Cardano as well. It's still under development. We don't know how much longer it's going to be under development, and it currently has some scalability issues with how many transactions it can process per second, and it's competing against many other big cryptos trying to do similar things like Ethereum and Polkadot, and has already increased over 5% in the last year, which could be a good thing. It could mean that it's just going to stay big, but it also could mean that there's some kind of correction. So there are things you want to consider before hopping into an investment here or hopping into an investment in any of these for that matter. Now we're going to go back to a more well-known name, and that is Ethereum. Where Bitcoin could be looked at as digital gold, Ethereum could be looked at as digital cash. Some people call it digital gas. Ethereum is a decentralized software platform that allows for smart contracts, we talked about that already, and decentralized applications to be built. Their token is called Ether or ETH. There's a little bit of confusion sometimes about what is Ethereum, what is Ether, what is ETH. So Ether is the coin. Ethereum will be transitioning completely to a proof of stake consensus mechanism in the future. So in the future, you will be able to also earn money by just holding Ethereum as long as you hold a node's worth. This will happen sometime either in 2021 or 2022. There's a lot of technical hurdles in order to do that transition. And I believe that this is going to allow for a dramatic increase in price and use cases for Ethereum. Now, I believe, like Bitcoin, every crypto portfolio should be welcoming to Bitcoin's not quite as popular cousin, Ethereum. You know, maybe Bitcoin is like the quarterback on the football team, and Ethereum is, I don't know, the head of the school band or something like that. There are some cons here with Ethereum as well. They have struggled with scaling. Their gas or transaction fees can be kind of volatile, and the price is, of course, volatile as well, like pretty much every other crypto. Next, I wanted to talk about Polkadot or DOT. This is an extremely interesting crypto that has built up a whole lot of steam recently. Polkadot's goal is to help unlock cryptos and data to help work together. Now, an issue with cryptos in general is they all kind of operate in their own worlds, which you can call silos, and then the real world also operates kind of in its own silos. So they don't all mesh very well together. You know, trying to combine real world data like account balances or stock prices with cryptos and then another crypto's price, it can get a little bit messy. And Polkadot is trying to address that. Polkadot is also a proof of stake system, so you can earn money by holding that coin and staking it, which I believe is huge. And the voting process to make changes within the Polkadot system are very democratic, which I appreciate. So basically, if you hold some of this crypto, you can cast your vote on potential future changes. Now, this can also be purchased on most large exchanges because it's getting quite popular right now. There are some cons as well. The biggest con, in my opinion, is they are competing with other big names like Cardano, Ethereum, Tezos, many other big names, and there's going to be one huge winner, and then there's going to be a long tail of not so big winners after that, in my opinion. Also, they have been hacked twice, so there are some concerns about that. Also, it's not the easiest to understand. If you watch a video on their tech or how exactly it works, it's not the easiest to understand, and I have a little bit of concern about anything that's not easy to understand and how readily just general society will accept that thing. And there may be limitations for smaller use cases within their ecosystem just due to high costs. Now, next, I want to talk about a much smaller coin. This is Ecomi or OMI. This is a crypto that is attempting to lead the charge in the digital collectibles space through their app Vivi. Now their name is a little bit confusing, so let me just do some defining here real quick. Ecomi is the company. OMI is the coin, and Vivi is their digital collectibles app. Now, this coin seems to be building popularity really fast for those who are deep into cryptos and NFTs. Just recently, Logan Paul has said that he owns a bunch of OMI, as well as another financial YouTuber, Andre Geek, who said that he bought $150,000 worth. So there are a lot of kind of big hitters here who are saying that they are investing their cash, and that's going to dramatically get an upswing in the price. And if this ends up becoming mainstream, we're only in the beginning right now, because right now it's trading at less than 1 cent per coin. That also is part and due because as of right now, it's kind of hard to buy, and I believe the price is going to jump once it's traded on more exchanges. I personally own some, and I had to make an account on Bitforex to buy it, which isn't my favorite exchange, but that was kind of my only option. If you're interested in buying some on Bitforex, I'll have that link down in the description as well. Now, again, this isn't financial advice. Make sure to do your own due diligence before you make any purchases of anything. OMI does have some cons that I want to address as well. First, they have so many tokens. They have 750 billion potential tokens. That is too many in my opinion. Bitcoin has 21 million. Also, they own licenses for many digital products. However, the details of the licenses aren't totally clear, and that's a little bit concerning. And a lot of the success on the OMI coin will be determined on the success of the VV app. And this is still a very new coin, so it's a little bit up in the air as to what exactly will happen. Next, we have the Hydra coin. This one is very unknown right now. It's a small cap coin, but it has some interesting use cases for transactions. They felt that if companies were ever going to use blockchain technologies for things like paying for a hotel room, these companies using the blockchains can't have wild fluctuations in transaction fees. They need to have predictable transaction fees. So Hydra set theirs at a flat 20 cents per transaction. They also have a very democratic process for voting in changes, which I always appreciate. And there are some internal blockers that can help stabilize the price of the coin if there's a sharp decrease in price. Basically what happens if, let's say there's a sharp decrease in price, they can vote to allow for a burn in the transacting coins. That way the total supply will decrease and the price will stabilize more. And that's a really interesting way to combat the volatility of crypto in general. And we'll see how exactly this pans out. And additionally, this is another proof of stake coin with some very, very attractive staking rewards. Right now, they're offering 185% interest on sites like KuCoin, which I'll have linked down in the description if you're interested in that. Now, this isn't going to last forever. Because this is a new coin, they're offering these really high staking rewards just for a few months to attract more people, to get people to learn about the coin. And then they're going to drop the staking rewards to about 20% per year, which is still a great return. 20% per year is pretty darn awesome. But there are cons with this coin as well. It's a very, very small coin. Of course, it's going to be volatile because of this. It's seen a recent surge in price, so it could dip, it could have a pretty major correction. The very high staking rewards aren't going to last forever, like I mentioned, and we don't know what's going to happen to the price once those rewards lower to 20%. Is there going to be a big correction? We're not really sure. So there's a ton of risk there. Of course, always do your own due diligence as well. I'm not here to try and pump anything. I'm just trying to give some context. That way you know where to start on your search on these coins, and then you can dive in and make purchases wherever you think makes the most sense. So I'd like to thank you so much for tuning in, and I hope you have a profitable day.